Dinar shift, and welcome to our detailed report. For well over a decade, the story of the Iraqi dinar has been one of immense hope and prolonged patience for countless individuals who acquired the currency. Many have held on to these notes through years of economic uncertainty, anticipating a future where Iraq's recovery would be reflected in the strength of its currency. This long period of waiting has been characterized by speculation, community discussion, and, for many, a sense of deep frustration as major financial pathways remained closed. The journey has been marked by a landscape where the dinar was often treated more as a novelty or a collector's item than a viable, exchangeable asset within mainstream banking circles. This perception, however, appears to be undergoing a fundamental and potentially historic transformation, suggesting that the narrative that has defined the dinar for so long may finally be entering a new and significant chapter. The hesitancy of major financial institutions in the United States to handle the Iraqi dinar, particularly high denomination notes like the 25,000 IQD bill, was not without reason. For years, banks cited a combination of valid and serious concerns that made engaging with the currency a high-risk proposition. Chief among these were questions of authenticity, as the market was perceived to have risks of counterfeit notes that could pose a liability. Furthermore, a lack of significant international, commercial demand meant there was no robust, liquid market for the dinar, making it difficult to process efficiently. Compounding these issues were the unpredictable monetary policies emanating from a nation still rebuilding its economic and political foundations. This mix of logistical and risk-based factors led most banks to adopt a firm policy of non-engagement, effectively sidelining the currency from their foreign exchange operations and leaving holders with very few official avenues for exchange. Recent developments, however, suggest a significant reversal of this long-standing institutional stance. Emerging reports, substantiated by a growing number of customer accounts, indicate that some of the largest banks in the United States are beginning to update their internal policies regarding the Iraqi dinar. This is not being described as a minor test or an isolated event at a single branch, but rather as a more coordinated shift in operational procedure. Institutions such as Wells Fargo, Chase, and Bank of America have been named in these reports as having initiated processes to accept and exchange certain dinar denominations. This movement represents a dramatic departure from the policies of the past decade, signaling a potential change in the risk assessment and perception of Iraq's currency within the highest echelons of the American financial system. The very possibility of walking into a major bank to conduct such a transaction is a development that many observers had long considered unlikely. Delving into the specifics of these reported changes, it appears each institution is adopting its own unique and carefully managed approach to this new phase of currency acceptance. At Wells Fargo, for instance, credible updates suggest that the bank has begun accepting denominations such as the 5,000 dinar note across branches in several states. This is reportedly being handled by staff who have received specific training to manage these transactions. Similarly, reports concerning Chase Bank indicate a strategic update to its foreign currency policies to include larger dinar denominations, with a rollout that seems to be focused on branches located in areas with larger Middle Eastern communities. This targeted approach suggests a deliberate effort to serve specific customer bases where the demand for such services might be highest, reflecting a calculated and methodical expansion of their currency exchange offerings. Bank of America, according to various accounts, has adopted what might be described as a more relationship-focused and cautious strategy. The institution is reportedly beginning to process dinar transactions, but primarily for existing, long-term customers who have an established and verifiable banking history. This approach inherently manages risk by limiting the service to individuals with whom the bank already has a trusted financial relationship, ensuring a higher level of security and compliance from the outset. What is clear across all these reported instances is that the change is not yet a blanket policy applied uniformly across every single branch in the country. Instead, it is a gradual and carefully controlled rollout. This methodical implementation underscores the significance of the shift, as it implies a deliberate change in corporate policy rather than a haphazard or reactive measure. A critical component of this new acceptance is the rigorous verification process being implemented by these banks. This is a non-negotiable step designed to protect both the financial institution and the customer from the risks of fraudulent activity. Bank personnel involved in these transactions are reportedly being trained to inspect the advanced security features embedded within modern Iraqi Dinar banknotes. These features are sophisticated and multi-layered, including specific watermarks that are visible when held up to light, color-shifting ink that changes its appearance when viewed from different angles, and intricate security threads woven directly into the currency paper. Verifying the unique serial numbering on each note is also a key part of this authentication process. This level of scrutiny ensures that only legitimate, government-issued currency enters the banking system, a crucial measure for maintaining trust and compliance. The operational logistics behind these changes are substantial and help explain why the rollout is occurring on a branch-by-branch basis rather than all at once. Equipping bank branches to handle a currency they have long rejected requires more than just a policy memo. It involves significant investment in training and resources. Tellers and foreign exchange specialists must be educated on the specific security features of the Iraqi dinar and trained on the protocols for its verification and processing. In some cases, specialized equipment may be necessary to aid in the authentication process. Furthermore, banks must establish clear internal procedures for documenting these transactions to comply with strict federal regulations. This methodical and resource-intensive implementation highlights the seriousness with which these institutions are approaching the reintroduction of the dinar into their foreign exchange portfolios. It is absolutely essential to draw a clear and unambiguous distinction between this reported bank acceptance and the concept of a currency revaluation. These are two fundamentally different events. The current developments pertain to banks agreeing to exchange the Iraqi dinar at its present, internationally recognized market rate. This simply means they are treating it like other foreign currencies, such as the Japanese yen or the Swiss franc, allowing customers to convert it into US dollars based on its current value. A revaluation, on the other hand, is a formal macroeconomic policy decision that would be made exclusively by the Central Bank of Iraq. Such a decision would involve officially changing the dinar's fixed exchange rate, thereby altering its value on a global scale. The actions of U.S. banks are operational, whereas a revaluation is a sovereign monetary policy act. To further clarify, the acceptance of the dinar by a commercial bank is a signal of confidence from the private sector, but it does not directly influence the currency's official valuation. That power rests solely with Iraq's central monetary authorities. Think of the current situation as the building of financial infrastructure. For any currency to function effectively on the world stage, it needs a network of banks willing to trade it. By beginning to accept the dinar, these U.S. institutions are effectively laying down the tracks and building the stations. A revaluation, if it were to ever occur, would be the train that runs on those tracks. The construction of the railway is a necessary prerequisite, a foundational step that enables future possibilities, but it is not the journey itself. Therefore, the current news is about the framework being put in place, not about a change in the currency's fundamental value. The question of why this shift is happening now can be answered by looking at a confluence of factors, both inside Iraq and on the international stage. A primary driver appears to be the significant progress Iraq has made in implementing comprehensive economic reforms. Over the past several years, the nation has worked diligently to stabilize its oil production, which serves as the lifeblood of its economy and a critical source of foreign exchange reserves. This stability has generated a more predictable revenue stream, allowing the country to make substantial progress in paying off portions of its foreign debt and bolstering its financial reserves. These actions are viewed by the international community as positive indicators of growing economic discipline and long-term stability, making the nation's currency a more attractive and less risky proposition for global financial partners. Alongside its macroeconomic progress, Iraq has also made significant strides in strengthening its regulatory and legal frameworks, particularly in areas crucial for international banking relationships. The country has reportedly enhanced its anti-money laundering's AML and counter-financing of terrorism and CFT systems to better align with global standards. For international banks, a partner nation's commitment to robust AML CFT protocols is a non-negotiable prerequisite for doing business. The perceived improvements in these systems have likely given institutions like the U.S., Treasury, and major American banks a greater level of confidence in the integrity of transactions involving Iraqi assets. This regulatory maturation is a key factor in reducing the perceived risk and opening the door for greater financial integration with the West. From a broader geopolitical and economic perspective, the timing of this development is also quite significant. As the global economy continues to evolve, there is a growing interest in emerging markets that present potential growth opportunities. Iraq, with its vast natural resources and a clear strategic plan for reconstruction and modernization, has been working to position itself as one such market. The nation is actively seeking foreign investment and is keen on strengthening its trade relationships with Western economies. The increased acceptance of its currency by major U.S. banks can be seen as a direct and tangible result of these efforts. It is a sign that Iraq's campaign to rejoin the mainstream of the global financial system is beginning to yield positive and measurable results. For individuals holding Iraqi Dinar who are interested in the possibility of an exchange, the consistent advice emerging from these reports is to prioritize clear communication and thorough preparation. The first and most crucial step is to contact one's bank directly, preferably by phone, to inquire about their specific policy on Iraqi Dinar exchanges. Given that policies are not uniform and vary widely from one branch to another, simply walking in with currency is not advisable. A preliminary call can confirm whether a particular location is equipped and authorized to handle the transaction, what the specific requirements are, and whether an appointment is necessary. This proactive approach saves time and ensures that one is interacting with a branch that is prepared for the process. Should a bank confirm its ability to process the exchange, customers should be prepared to meet standard compliance requirements. This typically includes holding an existing account in good standing with the institution and providing a valid form of government-issued identification. In some cases, particularly for larger amounts, banks may also inquire about the provenance of the currency, asking for documentation or proof of where the dinar was originally acquired. It is important to understand that these requirements are not personal or meant to be intrusive. They are standard procedures mandated by federal laws like the Bank Secrecy Act, designed to prevent illicit financial activities. Fulfilling these requirements is a standard part of any major foreign currency transaction in the United. Once the verification and compliance steps are completed, the actual exchange is processed based on the currency's prevailing market rate on that day. It is crucial for individuals to understand that they will not receive a hypothetical or rumored future rate, but the official exchange rate available at the time of the transaction. These rates fluctuate daily based on global market dynamics. The processing time for the transaction can also vary. Smaller exchanges might be completed relatively quickly, with funds deposited into an account on the same day. However, larger amounts may require additional verification and could take several business days to clear through the bank's central foreign exchange department before the funds become available. The broader implications of these developments for the Iraqi dinar market are potentially far-reaching. The acceptance of the currency by prominent U.S. banks bestows a new level of legitimacy that has been absent for many years. For a long time, the dinar existed in a kind of financial limbo, a sovereign currency that was, for all practical purposes, treated as untradeable by the Western banking system. As this begins to change, the currency slowly sheds its speculative, gray area status and is increasingly treated like any other legitimate foreign currency. This shift in perception is a critical step toward normalization and could have a cascading effect on how the dinar is viewed globally. This newfound legitimacy could, in turn, spur renewed interest from a wider range of investors and financial institutions. As more banks begin to facilitate exchanges, it naturally increases the global liquidity of the dinar, making it easier to trade. A more liquid market is generally a more stable and efficient market. Furthermore, This development serves to strengthen the economic and financial ties between Iraq and Western markets, a strategic goal that the Iraqi government has been actively pursuing. Each new bank that adds the dinar to its list of accepted currencies is another vote of confidence in Iraq's economic trajectory and another step toward its full reintegration into the international financial community. Real-world accounts of these transactions have begun to circulate, providing tangible evidence that these policy shifts are being actively implemented. For example, one widely shared report detailed an individual's experience in Texas, where they were able to successfully exchange a total of 50,000 dinar at a Wells Fargo branch. The process was described as methodical, taking approximately 45 minutes to complete, which included the authentication of the notes and the subsequent deposit of the U.S. dollar equivalent into their account. In another state, Florida, reports have emerged of multiple Chase Bank locations processing smaller dinar exchanges for their customers, apparently without significant issues. These anecdotes are important because they translate abstract policy changes into concrete, real-world outcomes. However, it is equally important to note that the experience has not been universally consistent. Other individuals have reported being turned away from branches of the very same banks, often encountering staff who were either unaware of the policy update or worked at a location that had not yet been trained or equipped to handle the transactions. This inconsistency underscores the gradual nature of the rollout and reinforces the critical importance of verifying a specific branch's capabilities beforehand. Change of this magnitude within large, bureaucratic organizations does not happen overnight. It is a process that unfolds over time, and patience remains a key element for those navigating this evolving landscape. From a global economic standpoint, these events can be interpreted as one of the most powerful signals to date that Iraq's long and arduous journey of economic restructuring is gaining international recognition. After decades of conflict and instability, the nation has been engaged in a quiet but determined effort to rebuild its financial foundations. The stabilization of oil exports has provided a crucial anchor for this recovery, while the expansion of trade partnerships is helping to diversify its economic relationships. The re-entry of the dinar into Western banking systems is an external validation of these internal efforts, suggesting that the international community is beginning to view Iraq's economy as maturing and increasingly credible. This development could also create a ripple effect, encouraging financial institutions in other countries, particularly in Europe and Asia, to reconsider their own policies regarding the Iraqi dinar. If U.S. banks, which operate under some of the world's strictest regulatory standards, are finding a way to safely process the currency, it may serve as a model for others to follow. In the long run, wider international acceptance would significantly strengthen Iraq's overall financial position on the world stage. It could help attract much-needed foreign investment into the country's non-oil sectors, further boost confidence in its monetary system, and solidify its status as a reliable and integrated member of the global economy. It is also important for U.S. residents to consider the tax implications of exchanging foreign currency. The Internal Revenue Service, IRS, views foreign currency as property, meaning that any transaction involving its exchange can be a taxable event. If an individual exchanges Iraqi dinar for U.S. dollars and realizes a gain, that is, if the dollar value received is greater than the original purchase price of the dinar, that gain is generally considered taxable income. Depending on how long the currency was held, this could be subject to either short-term or long-term capital gains tax. This makes meticulous record-keeping an absolute necessity for anyone considering an exchange. To ensure compliance and avoid any potential issues, it is highly advisable to maintain detailed records of all currency-related transactions. This includes receipts from the original purchase of the dinar, which establish the cost basis, as well as all documentation from the bank at the time of exchange. Keeping both digital and physical copies of these records is a prudent measure. For those planning to exchange significant amounts, consulting with a qualified tax professional or financial advisor beforehand is a wise step. An expert can provide personalized guidance based on an individual's specific financial situation, ensuring that the process is handled smoothly and in full compliance with all applicable tax laws and regulations. The psychological impact of this shift on the community of dinar holders should not be underestimated. For years, the narrative surrounding the dinar has been fueled by hope and speculation, but it has often lacked the validation of mainstream financial institutions. The skepticism that the dinar would ever be accepted again by major banks was a prevalent and powerful counter-narrative. The recent evidence that some of the largest and most respected banks in the United States are officially processing these notes fundamentally alters that dynamic. It moves the conversation from the realm of theory and rumor into the world of tangible, measurable policy change, providing a new level of credibility to the currency's status. Looking toward the remainder of this year and into 2025, the trajectory of the dinar's standing will continue to be shaped by a number of key factors originating from within Iraq. The country's next national budget, its strategies on global oil pricing, and the successful negotiation of new international trade agreements will all play a pivotal role. With its growing foreign reserves and a demonstrated commitment to improved financial transparency, Iraq is steadily rebuilding trust on the world stage. If this positive momentum is maintained, it is plausible that we could see an even broader range of U.S. and international banks begin to accept the dinar, further solidifying its return to the fold of globally recognized currencies. In conclusion, the reports of Wells Fargo, Chase, and Bank of America beginning to accept the Iraqi dinar represent a historic and noteworthy development in a story that has spanned nearly 2 decades. While this is not the revaluation event that some have long anticipated, it is an essential and foundational step that marks a significant return of confidence in Iraq's currency from the Western financial system. It is a transition from sideline speculation to mainstream acceptance. For those who have followed this journey, it is a time for continued diligence, cautious optimism, and a focus on verified information from official sources. The landscape is changing slowly but demonstrably, and the coming months will be critical in revealing the next chapter of this complex and evolving financial story.